Hello, today we're going to talk about the 7 important technical analysis lessons from the KLCI index. It's once said that those who do not learn history are doomed to repeat it. This quote could be attributed to George Santayana or Winston Churchill. But let's start with the first important technical analysis lessons. Now, number 1 is when an index breaks a daily downtrend line, it can be a sign of a trend change from downtrend to uptrend. So we have the KLCI index here, and as you can see, if we draw a downtrend line here connecting various highs, there's a high here, high here, high here, as many highs as possible. Okay. Alright. It need not be perfect, but as long as you connect as many highs, right, there's a downtrend line. Okay. This is the downtrend line, and what you can see is that the index was in a downtrend. When the moment it breaks above this downtrend line, look where the index went. From there onwards, it went up, drifted sideways, and now is in a daily uptrend. So always remember the importance of breaking a downtrend line. Now the second lesson we can learn from the KLCI index is a double bottom chart pattern can hint of a bottom in an index. This is a classic bottoming chart pattern. Here we can see, let me just draw kind of like a double bottom, if you will. Right. Okay, here's a double bottom, and you can see it looks like a W. Okay, and the presence of this double bottom hinted of a bottom in the KLCI index, and look where it is now. It's now making a new uptrend, a higher high and higher lows, and together with the break of a downtrend line, it's a very powerful sign that the index wants to bottom. And here's the interesting part. If we go to the weekly chart, here we have the KLCI making a bottom, and then it went up, and here's another bottom. So it's like you could say that the weekly charts also has a kind of a variation of a double bottom. But the important thing is the daily double bottom here that hinted of a bullish reversal. Now the third lesson that we can learn is when the KLCI index is below the declining 200 MA, stay away from stocks. What is the 200-day MA? This is the 200-day moving average. It's a very important moving average to technicians or even investors. Okay, it kind of tells you whether you should be bullish long-term or bearish long-term. So when it is declining and the index is below the 200-day moving average, look where it went. The KLCI had a kind of downtrend movement, and those who played stocks, the KLCI stock even during this period, right, suffer nasty corrections and crashes in stocks. It's not going to be easy, okay? And it's only when the index went back above the 200 MA and is curving up that things are good. So we can go back past history. Now look at this. This is the 200 MA. When the index was below the declining, okay, sloping downwards, index is declining and the 200 MA is declining. Look how terrible the fall and crash is for the KLCI. And if you have invested in stocks in the KLCI during this period, right, you will have suffered a lot of losses. So it's always important to remember this. Now the fourth lesson we can learn is a bullish 20 MA cross above the 50 MA usually precedes a nice uptrend. I call this a bullish cross. The 20 MA is the red line, the 50 MA is the blue line. So when you have a bullish cross here, when the 20 MA cross back above the 50 MA, it kind of gives you a hint that an uptrend will probably come. Okay, here's a bullish cross, and then here's a bullish cross, and look how the index traded up. So if you want to look for a nice uptrend in the KLCI, first, one of the hints is there's going to be a bullish cross. So when you see a bullish cross, right, it's a sign that a nice uptrend is probably coming, and that is what we are having right now. Now, the fifth lesson that we can learn is the best times to invest in stocks is when the KLCI is above the rising 200 MA. Now, we have right now the 200 MA traded sideways and is curving up. So this is an environment that is good to invest and trade in stocks. Let me just go back to history, back to about 2000 and here 2002 onwards. You can see that the KLCI is rising and the 200 MA is rising. This yellow line is a 200 MA, and you can see that when it is above the rising 200 MA, this is the index, it just keeps going higher and higher and higher and higher and higher until it drops back below the 200 MA. That's when problems begin. So during this period when the 200 MA was rising and the index was above this rising 200 MA, it was a very good time to buy stocks. Even every dips, right, are buyable and breakouts. So next time when you see the KLCI index above the rising 200 MA, right, it kind of give you a hint, that it's a good time to invest and trade in stocks. Okay, if it's below the 200 MA, then you might want to be more careful. Now, the sixth lesson is this: corrections and dips to rising daily 200-day moving average are excellent buying opportunities. Now, you just have to look at the period here back in 2012 when the index was rising and the index corrected here. It was a very nice buying opportunity, very nice swing opportunity, or you want to buy stocks cheaper. And then it declined again to the rising 200 MA. This was a very nice time to buy Malaysian stocks, and it went higher. And here's another correction down near to the 200 MA, and it went back up again. And here also a correction to the 200 MA. The rising 200 MA, and you could buy it for swing trade or invest in stocks, and it gave you a very good buying opportunity. So next time if you see the index drops to a rising, the keyword here is rising 200 MA, you might want to consider swing trading, or a place where you want to buy stocks cheaper. Okay, the seventh lesson here is regarding chart pattern. The chart pattern of the ascending triangle. Now, the ascending triangle can be a powerful bullish continuation pattern. Here we have an ascending triangle, the KLCI index rise, but you need to be able to, in order to see, you need to switch to the weekly chart. Okay, this is the weekly chart. It bottom here went up, and you can draw this kind of ascending triangle, the variation of it. Okay, about the same highs. Okay, ascending triangle where you have higher lows, but around same highs. And when KLCI broke out of this ascending triangle, look very nice. Okay, if you learn a bit about ascending triangle, the height of this pattern, right? Let me just draw the height of this pattern. Okay, you copy it, clone it, and you project it from the breakout around here. This is the initial target. It's more than met. So it's when you see a ascending triangle in the KLCI, and if it breaks out of it, you know it's gonna be most probably be bullish environment. So here are the 7 lessons from KLCI. There are many more lessons we can learn, but I just put 7 here so that you can digest it. Hope it helps you. If you don't understand, watch it again and try to read up on the lessons. Okay. So thank you for watching in the end. If you find it helpful, please like and subscribe to my channel for more videos like this.